Most people think they are being responsible by keeping money in a savings account. But here is the problem. A lot of savings accounts pay almost nothing, and your bank is completely fine with that. Because when your money earns close to zero, your bank gets to use your cash cheaply. And over time, you quietly lose purchasing power. Today, we are fixing that. If you have money sitting in a checking account or a low-interest savings account, you are leaving money on the table. Not because you are careless, but because most people were never taught there is a better option. A high-yield savings account is one of the simplest personal finance upgrades you can make. It will not make you rich, but it will stop your cash from being completely useless. And it is a perfect first step before you ever think about investing. So what is a high-yield savings account? A high-yield savings account is a type of savings account that pays a higher interest rate than a traditional savings account. The basic idea is the same. You deposit money. The bank pays you interest. The difference is how much interest you earn. Traditional savings accounts at large banks often pay extremely low rates. High-yield savings accounts are usually offered by online banks or financial institutions that operate with lower costs and pass some of that benefit on to you. In simple terms, it is still a savings account. It just actually pays you something. Here is how it works. When you deposit money into a bank, the bank does not let it sit there unused. Banks use deposits to fund loans and other financial activities. They make money by lending at higher rates than what they pay depositors. That difference helps generate profit. So why do online banks often pay higher interest rates? First, they have lower overhead. They do not need as many physical branches, buildings, or staff. Second, competition. Online banks compete aggressively on interest rates because they cannot rely on convenience or location. Third, interest rate conditions. When overall interest rates rise, banks may increase what they pay savers. But traditional banks are often slow to raise rates because many customers never move their money. A high-yield savings account is simply the better deal. Now let's talk about what a high-yield savings account is actually used for. This type of account is best for money you want to keep safe, accessible, and liquid. That usually includes an emergency fund, money for short-term goals like a car, a security deposit, or a down payment you plan to use soon, and buffer money that helps you avoid credit card debt when unexpected expenses come up. A high-yield savings account is not about chasing high returns. It is about protecting your cash and earning a fair rate while your money waits. So who should use a high-yield savings account? If you have an emergency fund, extra cash sitting in checking, or savings with no clear purpose, this account likely makes sense for you. Who should not rely on it? If your goal is long-term wealth building over decades, savings accounts are not designed for that. That is where investing usually comes in. Also, if you need to spend the money daily, a checking account still matters. A high-yield savings account is not a replacement for checking. It is a place to store savings efficiently. Now let's clear up some common myths. One myth is that high-yield savings accounts are risky. They are not automatically risky. Savings accounts are bank deposit products. What matters is where the account is held and whether deposits are insured. Another myth is that your money gets locked up. In most cases, you can transfer money in and out freely. This is not the same as a certificate of deposit. A real mistake people make is using a high-yield savings account like a spending account. Checking is for spending. Savings is for holding money. Another misconception is that the interest rate will stay high forever. It will not. Rates can rise or fall depending on economic conditions. The goal is not to chase tiny differences. The goal is to stop earning close to zero. People also forget about fees and requirements. Monthly fees, balance minimums, or restrictions can cancel out the benefit of a higher rate. And one thing many people overlook is taxes. Interest earned in a savings account is generally taxable income. That does not make it bad. It just means it is not free money with no strings attached. Now let's talk about how to set one up. First, choose a reputable financial institution. Look for deposit insurance and a solid track record. Second, open the account online. This usually takes about 10 minutes. You will need basic personal information. Third, Link your checking account so you can move money back and forth. Fourth, set up automatic transfers. This is one of the most powerful steps. Even small automatic deposits turn saving into a system instead of a decision you have to make each month. Fifth, give the money a job. Emergency fund, short-term goal. Buffer cash. Money with a purpose is harder to spend impulsively. Some banks also let you create multiple savings buckets under one account. This can help organize your goals while keeping everything in one place. This video is for educational purposes only. Always review the specific terms and details of any account you open. So here is the bottom line. A high-yield savings account is one of the easiest improvements you can make to your personal finances. It keeps your money safe, it keeps it accessible, and it pays you more than a traditional savings account. If your money is sitting in checking or a low-interest savings account, this is a simple fix. Next, we are going to talk about why keeping too much money in a checking account is costing you more than you think. This is Finance 101. See you in the next one.